Overnight, the euro soared on comments from the European Central Bank that they were likely to raise their official cash rate as early as next month. This comes well ahead of when most economic commentators were forecasting the next move in the European zone's official cash rate, which would not come until the late part of this year. The New Zealand dollar was down as much as a cent against the euro overnight and is at levels not seen since the first half of 2010. The New Zealand dollar itself was under terrific pressure overnight as an International Monetary Fund spokesperson came out and said that they are likely to downwards revise the growth aspirations for New Zealand for this year. Obviously, this comes as no surprise to any New Zealander, as the devastating impact of the Canterbury earthquake will no doubt affect our economic growth aspirations. The New Zealand dollar was down against the US dollar overnight and currently sits around 74 US cents. Global share indices showed strong gains overnight as the price of oil slipped on new news that the tension in Libya seems to be subsiding at the moment. This is due to Venezuelan Hugo Chavez sending out a message that he is likely to broker a peace deal between the interested parties over there. This caused US investors to focus on their own markets rather than looking across to the Gulf to see the problems over there. The next major event from the US is non-farm payrolls due out tonight. It is expected that it will be a very strong number, and this may underline the recovery in the US economy. Also, the major news overnight was that European Central Bank Trichet is likely to increase their official cash rate next month. This has sent interest rates up in both the Eurozone and in the US, and it probably means that investors have been underrating the strength of these economies and also not fully countering the effects of inflation, which has come to surface in these economies as having on the underlying interest rates. Food prices, which has already soared on the back of a poor harvest from last year, have once again been climbing as the price of oil increases on the Libyan tensions. We have to spare a moment for some of the developing countries around the world which are facing food price inflation well in excess of 10% right now, and no doubt this is impacting people's ability to eat in those countries. Back here in New Zealand, the high oil prices and obviously the high prices seen in grain and also coffee prices are likely to underline the dairy economy in New Zealand for at least the next 12 months. This is due to the fact that many inputs into our processes are very highly energy dependent, and when the price of oil is upwards of $100 a barrel, it does put significant pressure into margins of both US and European producers.